Fundsupermart.com.
Hi Martin. The First State Regional China Fund has been Fundsupermart's recommended fund for the 8th consecutive years due to its consistent returns and defensive qualities. What is the secret behind the fund's success?
Well, I think it is mainly about the investment philosophy. The team has always taken the view that we should take a long-term view on the market, focus on the companies, and especially focus on the quality of companies, quality of management, quality of the business franchise that we invest into, and take a long-term view. So we pay very little attention to the benchmark. In fact, when we take a position in stock, we take a 3 to 5 year view. And we do it in such a way that we even structured our own incentive scheme based on 3 to 5 year absolute performance. And in addition, we try to encourage every one of our team, not encourage, it's actually mandatory for everyone on the team to invest into the funds with our own money and not for 3 years, in order to make people look at the funds as their own money and take it seriously. So I think it's a team effort. We have a team of 29 people now, taking a long-term view on the good qualities that we think we should invest for the longer run.
Can you briefly describe the investment process of the fund? Are there any market capitalization, sector, or individual stock weighting considerations when constructing the fund's portfolio?
Yeah. First of all, this is even though the name is Regional China, it's actually a Greater China Fund. It invests into Hong Kong, China, and Taiwan. Even though we don't take a very strict geographical specification, in other words, we can invest into companies listed in US or Singapore or Japan, etc. This is what we call the Leaders Fund. In other words, it actually invests into companies with a free float of 1.5 billion US dollar and above, so we wouldn't invest into too small companies. In terms of sectors, we are flexible, but typically we don't want to have more than 25% of our fund invested into one sector in order to have a decent diversification. The focus is, as I said, is pretty much on quality and take a long-term view. So it's a very bottom-up driven fund. We pay very little attention to macro news, even though we do take a view on a top-down perspective. The aim is really to look for good companies and be invested for the next 3 to 5 years.
Despite the prominence of the Chinese consumption story, the fund does not have particularly large weights allocated to either the consumer staples or consumer discretionary sectors. What are your thoughts on Chinese consumption and the reasons for these allocations?
Yeah, we as a team is positive on domestic consumption in Asia, including China. So we do like to explore into the consumer-related companies in the Greater China area. However, sometimes it doesn't mean that you need to invest into a consumer company. When I say that, sometimes the consumption story could be in the form of other sectors. For example, in the fund, we have quite a lot of exposure to the gas consumption story in China, and this is played through the gas distributors, which are not defined as consumer stocks in the index. So again, telling you the index has its own limitations. On the other hand, even though we might be positive on the consumer story in China, consumer companies also have its own problem. For example, everyone knows about the sportswear sector in China is not doing well. And the reason for that is the entry barrier is low and there's so many different brands. So they don't perform well when the economy is slowing. So even though we are positive on consumption, but we also need to be mindful about the supply side. In other words, there's so many brands, different types of brands, and they may not perform well at the same time. So the weighting of the consumer companies in the portfolio doesn't necessarily reflect our positive stance on the consumption story in the longer run.
The financial sector has always enjoyed a large allocation within the fund. Can you describe the investment rationale behind this decision? Also, what is your outlook with respect to the property component within the financial sector, and how is the fund positioned with regards to property companies?
Yeah, for the index, the definition of financials is very, very broad. It includes banks, insurance companies, property, as well as conglomerates. So again, it tells you the limitations of the index. We have actually very little exposure to the pure banks in the region, including Chinese, Taiwanese, and Hong Kong banks. So the financials exposure is really because of our property and conglomerate exposure. We have a significant exposure to the likes of Cheung Kong and Jardine Matheson, for example. These are conglomerates with diversified exposure rather than defined as financial per se within the index. For the property side of the Greater China region, depends on your time horizon, because for the last 5 years, for example, we've taken quite a positive view on the Hong Kong property market based on the belief that China is turning from an exporter of goods to an exporter of capital. So when money is coming out from China, very often it would need to go through Hong Kong, benefiting the property price in Hong Kong. But that has been the case for the last 5 years. I think there's no doubt, rather like Singapore, there's clearly some kind of property bubble or asset bubble, as far as the price is concerned. So we're actually also turning a bit more careful on this overall property theme. When it comes to China, we do believe there's still policy uncertainties with regards to China property sector. However, within the sector itself, we do identify a couple of companies which we believe would do well in the long run. You may or may not know, but the biggest property stock company in China right now has around 1 to 2% market share. So in other words, there's still a lot of room for industry consolidation, and we believe if we invest into a good quality property company, there's still plenty of potential if you take a longer term view, despite the property measures that you're seeing today.
Thank you.